Good morning, everybody. It is December 21st, 2023, 8:55 a.m. I'm sorry, I'm late. 10 minutes today. Had to finish a couple of things. But I'm here. I'm ready to go. And we have a lot of stuff to get into in this market open. This is going to be one of the more interesting market opens because, yesterday was a test of equities. Yesterday was a test of equities towards the end of the day. And because it was a test of equities towards the end of the day, we now are ready to take off from that test. I mean, the analysis that I've been seeing from last night, based on that flash crash we had, and we're going to get a lot into it, is essentially there's a reason for why we had that crash, which we'll talk about. But once we had that crash, that was like a core test that equities needed to have. And as you can see this morning, if you look at your portfolio, everything is green because nothing is stopping the market continuing to go up. It was just a random thing that needed to happen in order for the market to get a little bit of a breather before it continued going further. So we're going to talk a lot about what's happening and then keep going for why it's happening. Perry says yesterday was a test of nerve and resolve starting at 3 p.m. Eastern. Yeah, I mean, yesterday 3 p.m. was really, really interesting in terms of what happened. I have some reasoning for why that's happening and how it's going. And then we're going to keep going from there. Again, sorry I'm late. Had to finish a couple things right here at the morning. That's why I had to delay it by 10 minutes. But we are here. We are ready. And we've got a hell of a market to talk about because there's a lot of stuff going on. Garcia, Sasky Rose, Perry, General Wellness, Ty Gordon, General Wellness, Mark, Gerald, Ryan, Bryant Robertson, David, Walter White. I love that. Ryan R. I took a sick day to be here today. Damn, that's crazy, dude. Well, we're going to make it your day. I'm sorry I was 10 minutes late. I had to finish a bunch of things this morning. It was a little bit of a hectic morning, but I'm here, ready to go. Next time I know I'm 10 minutes late, I'm just going to type in the chat, guys, give me 10 minutes. I think that'd be a better way to let you guys know versus like completely just like show up randomly 10 minutes late. So next time I'm late, next time I'm finishing up a bunch of things. We have a party tomorrow at our house and I just have to get a bunch of shit done. I'll just let you guys know in the chat. So we'll go from there. My mom's birthday is tomorrow. So excited for that. And it'll be fun. Just Jeff, Ray, Lev, Doug, Roy, Richard, Midwest Cannabis, Stacy Walker, Zelena, Irwin, Mario, Big Billy, P. Morton, Garcia, Adam, what do we got? Jason the Victor, Meta, Austin Smith, Joe. All right. So thank you all for being here. Deeply, deeply appreciate it. Let's talk about what happened last night at 3 p.m. Because that was that was kind of scary in terms of what happened last night. There is an explanation for what happened last night. Once I found out the explanation, I was like, wait a second. This is not Once I found out why we crashed at 3 p.m., and I know I'm saying crash, it wasn't a crash. It was down 1%. But equities went down. I mean, look, Robinhood was supporting 13 all day. And then out of nowhere, the sucker falls to 1260. And I'm like, wait a second. There's no way that many people sold off Robinhood at power hour at 3 p.m., right? Like SoFi, SoFi fell 6%. I mean, SoFi like tasted 10 and then it just dropped dramatically. And I was like, wait, there's no way that many people decided, yeah, we're just going to sell it off right at that last moment. So what was the real reason? Why did that actually happen? And how did that go down? And why is that so damn bullish for today? Because that test that we got in terms of the equities that crashed, that's actually, from what I've been reading, very, very good for why they're coming back so violently this morning as well. Mersha Mahai, I'm sorry if I'm saying that wrong. Mersin Mahai, hello from Romania. Hello, thank you for being here. Sashi says, yesterday was a crash test. Those who sold were the dummies. Yeah, if you sold yesterday because the market kind of scared you, it wasn't really the best move, in my opinion, because you just weren't supposed to sell on that particular crash. So here's why the market crashed, okay? There were a lot of 0-day options at the 475 level on the S&P 500, okay? And they expired yesterday because they're 0-day options. Some of them obviously had expiration dates for 12/21, but about 1 million of them, okay? So about 1 million calls printed at the 475 level for the S&P 500 and were sold off 25 minutes ago. Now, what does that mean? That essentially means if I have a call option on a stock, I think the stock's going to get to XYZ level. If it's a 0-day expiration option, that means I know it's going to expire this day, which means there's a lot of pressure on that call option, especially if there's 1 million of them. Well, if the S&P gets to 475, which I think I got to yesterday, and then it gets sold off, then you have a lot of underlying pressure on the asset when you have that many options on the actual stock itself, in this case, the S&P 500. So, if you have Tesla that has like, 150,000 call options for 270 and they get sold off immediately, that means, the market thinks that that's not going to happen, or the market gets worried about the nature of the relationship between those call options and the actual stock. More momentum in terms of the calls they're not always good for the stock, but it does mean that the stock has some more buy side momentum. And when there's sell side pressure, there's puts, etc., there's shorting of the stock, that's bad for the underlying asset. The S&P 500, because it had to expire, those options have to expire. You can see it's down $4.89 yesterday, 1%. That was the result of those options expiring. That's where the sell side pressure came in and ended up affecting the rest of the market, because obviously the S&P 500 is, the index of the 500 biggest companies. And so that's why you get a bit of a sell-off here. If I show you guys another picture right here, this is what happened. This is when I started noticing. Like PayPal was green. PayPal eventually turned red. But this was like around, what was it? This was like 2:47. I tweeted this. And I was just like, what is going on? Like, we had a great day. Why is this happening? And then boom, the whole thing cracks, and then we see that downside momentum. Now, even though that happened, the question is that real? Or is that something that's just like, well, it happened and therefore we have to move on from there? From what I'm understanding, that was just a part of what needed to happen in order for equities to start moving higher. The reason for this is because equities don't move up forever, right? There's always going to be some level of equities that take time to move back forward. Like, we weren't going to get to 480 on the S&P, 478 all-time highs without it continuing to, go back and forth a little bit. We've had 7 weeks of the S&P continuing to go higher. And this is an account I follow on Twitter that I think was actually a really good account, 200,000 followers, very sophisticated in terms of the trading analysis. Says, well, that was a wild day. Markets needed a breather for sure. This person had a lot of coin calls. And they also made an argument from a technical perspective. I'm not sure exactly which tweet it was, but basically you got full tests across the board on equities. And those tests were desperately needed from a technical perspective as well. Like, if we didn't get those tests on a technical level, then you would start to think, all right, what's going on? Why does the market just keep going up and up and up? It was very healthy to see a 1% pullback. It was just very random to see the 1% pullback. I was talking with Steve yesterday, and Steve and I were just kind of going through the bear cases for 2024, and we couldn't think of one. Not saying that there is no bear case, but it's just like, if you sell off the market right now, where do you put that money? Where do you put it? Do you put it back into a bank? No. Do you put it into money market funds? Probably not. Like, do you put it into your Robinhood 5% savings? Sure. But like where do you put your money? And so I think the broader question for equities right now, which is incredibly interesting, and it kind of starts justifying that I think towards the end of the year, it's going to be a pretty interesting rally, is that if you have nowhere else to put it, right, then you kind of got to leave it in, or you got to kind of got to buy more of it. I mean, I think of it from a sophisticated perspective. If you have $100,000 and you're not putting it into the market, you're not participating in the small caps, the regionals, big tech, etc., where are you putting it? And so if you want to get 5% going into 2024, when the Fed said they're going to cut rates and you need to front run that, then it's going to go into the markets. And as a result of that, there was no reason for the sell-off yesterday, right? Like, whenever we have a sell-off, it's like, all right, what's the reason? There really wasn't a reason. We're going to listen to Tom Lee in a second. His reason was, I think, the best reason that was out there, which is that investors just wanted to take some profits, which is totally normal. This was a day of just like taking profits, but that's not enough to tank the market, right? Taking profits is just taking profits. Actual bad things that happen in the stock market is what sustains further downside. And there's just nothing that happened there in order for the market to continue to go down. So Smitty says, I'm pulling into the market so I can get a rug pulled on. See, that's the thing. A lot of people were like, oh, it's a rug pull. It's like, but wait a second. Why? Like, where's the reason for the rug pull? Robinhood up 2% in the pre-market. SoFi up 2.5% in the pre-markets. S&P at 471 in the pre-markets. Palantir up 2% in the pre-markets. Disney is up. PayPal's up 1.3%. IWM Russell up 1.2%. Google up 1.2%, hitting 140 again in the pre-market. Tesla up 1.93%. We got to talk about Cathie Wood in a little bit, buying a ton of Tesla. Bitcoin, ladies and gentlemen, is at 44,000. You don't see the type of run we're seeing this early in the morning if there was a reason for the market to be sold off. That's my point. Like, if there was a genuine reason yesterday that we had to fall 1% and everything had to go red, we would see that in the pre-market. Like, even yesterday when I tweeted out the futures, I was like, wait a second. The futures are green. And they're like violently green. I'm like, as soon as I saw that right before I slept, I was like, tomorrow's going to be a good day. I was like, tomorrow's going to be a good day because I'm alive. And it's like that's always a good day. That's always a reason it's going to be a good day. But another reason I was like, wait, the futures are green. The futures aren't feeling like today's downside pressure towards the end of the day was something that needs to be sustained. It felt like it was something where options were expiring, things were going here. We kind of had to get a little bit of a breather, and then boom, that happened. It wasn't necessarily a reason for like the market, like it has some fundamental problem. And when you look at the bears, and I've been listening to every bear I can, they all have like just bad arguments. Like their arguments are not good. And so if they had really good arguments, you would start to be like, there's something here. None of their arguments have been materializing in that big of a way. So let's go to Tom Lee. Let's see what he has to say about the sell-off that we saw yesterday.
He is with us here at Post 9. Welcome back.
Thank you, Scott.
What do you think? We just got a little, ahead of ourselves, or I don't know. Maybe we just need a breather because it's been remarkable.
Yeah, that's right. I wouldn't be surprised if there's some profit taking today. I don't think it changes the case that stocks are probably going to do very well between today and the end of the year. And we get a pretty important report on Friday, which is PCE, deflator.
Yeah. You surprised that this market has continued to just ramp higher, almost unabated?
I think there was a sequence of events that justify the move, because we know last week we got a Fed that has made a dovish move, ending its inflation war or shifting it towards managing the business cycle. We know that 65% of fund managers are underperforming their benchmark, and we know $240 billion was pulled out of equities. So between now and year end, which is a small window, you do have fund managers trying to catch up, and I think a lot of investors reorienting their portfolio towards a nicer Fed, a less hawkish Fed. And I think stocks are up. Investors need to allocate to stocks.
Unless investors need to take a breather themselves. I had a conversation yesterday with Eric Johnston of Cantor, who's been as bearish as you've been bullish, and told me he just can't show up now and all of a sudden change. Here's why.
I would not be able to come here and say high conviction bullish based on the current multiples, where we are in the cycle, where earnings are, where positioning are. It's just not even close. Okay, what I would need is to see.
And again, this is the problem. This guy's been bearish the whole year, so now you can't turn bullish, right? This is like you're really stuck here. But the problem is there's still not a reason to be massively bearish.
Either a recession or close to a recession where people think that it's coming. We get a big growth scare, and the unemployment rate starts to go above 4%, a little bit of a cleansing, and lower prices.
In other words, you're going to get all bulled up, even more so now with multiples expanding to where they have?
Well, as you know, valuation isn't really why anyone should ever sell a stock, nor why they should buy a stock. It really should be whether earnings momentum is accelerating. And next year, it looks like capital spending is going to pick up. There's a lot of surveys showing this, and there's a gap between the hard and soft data. So there's a CapEx cycle. We also know mortgage rates could drop to something like a 4.75, 5.2 next year.
Well, that's not ahead of ourselves a little bit?
That would be taking a normal spread to the current tenure. And that 200 basis point drop in mortgage rates, we know, would stimulate the consumer and re-liquefy regional bank balance sheets, which is an earnings story too. So I'd say earnings momentum picks up next year. We have a Fed that's trying to at least maintain the business cycle, and investors are bearish. There's a lot of anchored views. We just heard one clearly articulate that they're going to only turn bullish if there's a recession.
Yeah, but I feel like the bears.
That's why, Tom Lee's trying to make the argument that, look, we usually go against consensus. And Tom Lee's making the case that, well, if people are turning bearish, maybe you want to be bullish. Scott points out that a lot of people are turning bullish. But Tom Lee's argument is most people still think this economy, the stock market, doesn't make sense. And that's actually why you want to be bullish, because that's the contrarian perspective.
Are kind of dropping like flies now, right? I mean, there aren't that many of them. I've seen some strategists who were very bearish over the course of the last year suggest, stocks can continue to go up. This Fed pivot is that powerful. The other side of that, though, is what Eric Johnston and others would suggest, that it's a little too early to think that earnings are going to live up to all of this hype. A lot of hype that you have. I mean, your earnings number last time you came here, the best case
for 2025,
amazing case, unbelievably incredible case was like $280.
But
do I remember that correctly?
Yeah, you are, Scott, but that's not a prodigious feat. It's about a 10% CAGR. So it's like saying 5% from buybacks, nominal GDP, and weaker dollar get you there. I don't think it's a lot to ask to get to 280 in earnings.
Look, I think Tom Lee could possibly be right on that. Everyone's like, there's no way we can get $280 a share per earnings when it comes to the S&P 500, which is where you get to that like 5,200 level on the S&P by the end of the year. But if we find a way to inch it out, especially if you have buybacks, earnings growth, momentum, I mean, dude, it is very, very, very possible to see that happen, especially if the momentum continues. A couple of macro headlines I want to go through that is continuing to prove the point. Thank you, everyone, for being here, for why this market is risk on, baby. And then we're gonna go into some of these equities. So here's what we got from the macro. 4 indicators that I think are interesting. So first of all, U.S. GDP growth quarter over quarter final came in at 4.9% this quarter. We were expecting 5.2, which is okay because it's not as high as 5.2, but the previous was 2.1. So, I mean, the growth actually, even though it came in a little red, that's still pretty good. That's not bad at all. GDP price index came in at 3.3%. Previous was 1.7. Consensus was 3.5. So that came in lower than expected. Initial jobless came in at 205,000 jobs. We expected there to be 215,000 jobs, which is also really good, right? Less people actually filed that they didn't have jobs. This is good because that means unemployment necessarily is not, going to the moon. And then the Philadelphia Fed manufacturing index came in at negative 10.5. The consensus was negative 3. Previous was negative 5.9, all showing that the lowering of rates is more likely coming towards the end of March, which is a really good thing. We got another piece of news right here where GDP growth, again, is at its highest level since the end of 2021. So again, how everyone was saying, well, GDP is barely going to grow next year in 2024. Right now, it's at 4.9% growth. And that's not bad for an economy. I mean, that's definitely not an economy so the bears are like, well, we need, we just think the economy is going to slow down so dramatically. Earnings are going to fall off a cliff. The consumer is not going to be able to be spending, and the Fed's going to have to cut massive interest rates because the economy is broken. So far, that has not happened. And it's like, at some level, I'm really trying to understand the bears argument. And if they go back to, well, the yield curves are inverted, it's like, okay, buddy, like if that's your best argument for why things are, for why it's going to be a bad year, I just don't think you can rely on that. That's not the easiest way to be able to make this argument. So I don't know. It's hard to see the structural argument that the economy is in that is so horrible that we need to turn bearish and we need to raise cash. And I'm not seeing it. And I read a lot of articles every day trying to get to the broader point. You can say, even if you say a Magnificent Seven is overvalued, it's like, okay, so it's not like people are not going to invest in Google, Microsoft. I mean, if anything, if more money comes into the economy, they're going to continue to go invest in Google, Microsoft. Like, those are the safety plays that people want to have. So yeah, they might be a little higher, even though when you really look at their numbers, they're growing so damn much. They're really not that overvalued. So I don't know. I just don't know what the bears argument is for why we don't want to be participating in this market. And again, yesterday we saw a sell-off, which is fine. It was a 1% sell-off that people needed to have. And today the bounce back is incredibly violent. I think we're going to have a very green day today, just seeing where things are, because that was a great test we needed yesterday. And now we are continuing to be green. I mean, literally, I'm looking through my portfolio. The only thing that's red is like 2 penny stocks. Everything is green. Like, everything is green. And there's a reason everything is green. It's because that dip was bought. And people are like, well, let's get back in. Bitcoin. Let's look at Bitcoin. Bitcoin. I think we're in a bull market for Bitcoin, folks. Bitcoin is 44. Oh, damn, 43. We were at 44.2 for the rest of the morning. Oh, we hit 44.3. It's really nice to see us at this 43,900 level, because if we can sustain there, I mean, we're going to break out to 44, 45, 46, which is going to be exciting as well. Vincent says there's a saying that don't go against the freight train. What's up, Amit? Yeah, and don't go against the Fed. The Fed said they're pivoting. If the Fed said they're pivoting, they're pivoting. Mario says Shiba Inu coin is red for me. Yeah, there's some altcoins that are down, but even the altcoin markets, I mean, like, if you guys look at some of these altcoins, they're up. They're up a lot. And so, there is money to be made there. Philip says, Amit, with the energy every day, if this kid was a stock, I would invest. So we got to keep the energy because we've got a bull market, and there's no reason to be not having any energy when these stocks are going green. ARMS at 70, Robinhood 12.89. I mean, Robinhood, let's see if we can break 13 again on Robinhood. I think it's possible. Look, I think Robinhood wants to get to that $15 level. I really do. And there's enough buying pressure. I mean, there are enough buyers. You know what? That's the crazy thing about the market. There are plenty of buyers, but when the algorithms decide to sell it off, it's like clockwork. It's like these stocks are just controlled by some puppet master. And it's like, no matter, it doesn't matter that it was $13 for like 4 hours. If the puppet master decides that it's time for these stocks to go red, they will go red. It's just actually incredible the way the way the market works sometimes. Like in unison, all these stocks fell. And I'm like, I guess the algorithms just own every stock and they just decide to pull the trigger. And when they want to tank it, it tanks. And that's what we had for all of 2022. I think a lot of things people forget as well is that 2022, dude, we went to every single earnings was so bad. Every stock just fell to like dramatic all-time lows. I mean, it was just really, really bad. And now we're not in that situation anymore because earnings have increased. EPS has grown. Revenues have gone up. This is what I was talking about with Steve yesterday on the phone. It's just like, where is the argument for why these companies are so massively overvalued? Because look, in 2021, yes, they were overvalued. But in 2021, Meta didn't have, 150,000 employees. I mean, or they did. Now they don't, right? So their cost per employee, their revenue per employee, it's dramatically gone up since they did a lot of cost rationalization. A lot of stuff has happened since then. So it's hard to justify some of the bear case. Amazon 153, Costco 0.76, Marathon up 5.29%, Coinbase up 2.5%, aiming for that 170 level right now at 166. CleanSpark up 5.43% in the $11 range. Snowflake at 197. We got Riot up 3.47%. Hut 8 mining, let's check on that one. Hut 8 mining is up 3.95%. Bitcoin again, 42,892. S&P 500 at 0.71. Let's talk about Palantir for a bit. Palantir about 758 right now, and we'll keep going from there. So Palantir made a demo yesterday that highlighted their use of AIP for Santa Claus. I'm not going to play the demo. I'll do it in the video today of the Daily Palantir episode, so you guys will see it. But it was really interesting because I think it was a good way for Palantir to begin kind of showing how AIP can be used in a more simple way, right? For the average everyday person, not something that's like in a hospital or in an energy manufacturing plant, but something that's pretty easy for people to use. The demo was really good. A lot of people, I know you guys saw it. Basically, Santa Claus had to deliver presents all around the world, and he had to make the toys. He had to figure out the delivery routes, the weather patterns, all that stuff. And they did a really good job ontologizing all of that data, that notional data, and then being able to take that data and then fine tune it with AIP logic to be able to create the actual routes and the prompts that would allow Santa to be able to get this job done. So they took you in as if you were like, the mastermind behind Santa Claus and like really building out this entire system. I encourage people to watch it. It's on their YouTube channel. I think it was a really, really, really good idea. One update we have going on with Palantir is that in the UK, we are seeing protests. These are the protests we're seeing right now. As you can see right here, they said Palantir something. Palantir. Oh, no Palantir in NHS. No Palantir in NHS. And so happening now, hundreds of NHS workers blockade London office of US spy firm Palantir, saying no place for war profiteers in our NHS. Palantir has been given a £330 million NHS contract despite its complicity in Israel's genocide and systematic targeting of Gaza health facilities. So this is something I think we expected when it came to Palantir's ability to get into the NHS and Palantir to be able to stay. Look, at the end of the day, I've grown a lot older, and while I am empathetic to people protesting, and obviously they should have the right to protest and voice their opinion, I think these are the people that don't really do anything in the world, quite frankly. And that's just my opinion. You can love it, you can hate it, but these are the same people that will post on an Instagram story, hey, we need to boycott Starbucks because they support Israel. It's like, okay, what about your iPhone that you posted on that was made by child slaves in China? I mean, and that level of hypocrisy at this point in my life, at 26 years old, I've come to the conclusion that I cannot be friends with people that have that type of hypocrisy, nor can I get in a relationship with someone that has this type of hypocrisy. It's funny for me, my ex-girlfriend, we still follow each other on Instagram, and occasionally I see one of her Instagram posts, and she just posted this like stuff about we need to boycott Kit Kat, the candy, because they're complicit in the genocide. I'm just like, so I can't eat a Kit Kat now? If I eat a Kit Kat, I'm complicit in the horrible things that are going on. The level of narcissism, and that is the perfect word for this, the level of narcissism you need to have in order to be able to come to the conclusion that me drinking Starbucks is complicit in what the Israeli government is doing, which I'm not taking a stance on good, bad, whatever. Everyone has their own opinion. You can obviously critique it. You can obviously say other things, that they do have a right to do this stuff. But to think that your lack of drinking a caramel frappuccino is going to have some dramatic impact across the world, I mean, goodness gracious, you've got give me a break. Yeah, give me a fucking break, dude. It's getting to the point where those people, I'm just like, it's just like, I can't believe I dated you, to be honest. Like, that's why and honestly, part of the reason we broke up is because I was leaning towards more entrepreneurship and capitalism. And I could tell she was holding me back because she cared so much about like doing good in the world. And I'm like, dude, we can do a lot of good in the world by making some fucking money. Like, that's how we're going to do good in the world. You can't give a homeless person $20 on the street, which I did about 3 weeks ago when I was on the train and he needed a train ticket and he was asking people for $20 and no one was giving him the fucking money. I was like, dude, here, take $20. Like, you can only do that when you have some money to give at the end of the day. And so this is it's those a lot of those people protesting Palantir is going to have to deal with. It's not stopping them from getting the deal. It's not stopping them from getting the NHS contract. They already got the contract. Those people can protest all they want and, feel good about themselves when they go home and, order from Amazon Prime, which is now, the worst company. Like, they will do all the most hypocritical things and then say Palantir, which is trying to optimize the waiting times in the NHS, is the evil company. Sure. Be my guest. You are not as educated as you think you are, but you can feel like you're educated, which is fine. Everyone can have those moments. The scary part is the older people that are doing that, not the younger people. The people that are like 40 and 50 and still believe in it. I'm like, dude, what have you done for the past 40 years? Like, have you even thought of growing a little bit? I think not. So, that's my take on it. They can keep protesting all they want. To me, it's actually funny. I just gotten to the point where I see this stuff and I think it's funny because people are just so unbelievably educated on what's going on in the world and how without having power or money, your little protest is not going to change anything. And is that sad to say? Sure. But you need to get the money. This is a good quote by Chamath that I believe in deeply. It's like, if you want to make change in the world, you have to get the money. The money influences the power influences the change. If you don't have the money, your protests mean nothing. It's just not getting the job done. You may feel good doing it, posting your little Instagram story about we need to boycott, blah, blah, blah. Okay. To your 500 followers, you're not even a content creator. That's the worst thing about it. Like, when I see these people, like, you don't even have influence, bro. You have like 10 people watching your posts that are your friends from high school. Who are you influencing to cause some massive revolution? It's like, no, it's not. It's like you're wasting your time. You need to be doing something else. So, in my opinion, that's just, it's funny to see how that's happening from there. All right, let's go on to some of the other equity stuff we got going on. We got 8 minutes until the market opens. That's the quick update on Palantir. Nothing else too crazy on Palantir for today. We'll see some updates going into the end of the year. We got Robinhood right now. There you go. 1290 up 2.2%. Tesla. Oh, let's talk about Tesla. 1.72%. So Cathie Wood bought Tesla yesterday. And I was really, really confused why Cathie Wood bought Tesla. And I would love to know if anyone's perspectives in the chat. Let me pull up the screenshot here. Cathie Wood bought 111,000 shares of Tesla. And I think this is really bullish for Tesla. I think this is super bullish for Tesla because, like or not, Cathie Wood knows how to time Tesla. And I think she knows how to time Tesla because she got into Tesla earlier than everybody. She understands the stock better than everybody, quite frankly, in my opinion. When she was selling in the summer, by the way, at these prices, a little bit higher, 260, 265, but still around these prices, she definitely wasn't buying. She bought, as you can see here, 93,000 shares RKK. And then 17,000 shares ARKW. When she was selling in the summer, people got really mad. And then after Q3, Tesla tanked. I mean, we went below 200, right? So perfect sell for Cathie. They made a lot of money in that moment, and they, they prevented a lot of loss of capital. And that was a really good thing. When I saw this yesterday, I was like, at these prices, she was not buying, she was selling. Why is she buying? I think she thinks Tesla's about to run. I think she thinks Tesla's about to run. And quite frankly, I kind of think she's right because, again, we were talking about this in the beginning of the market open. What we saw yesterday was not a legitimate crash. It was just a flash crash, options expiring, blah, 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 blah. The market's ready to run. And there's nothing really stopping this run. And the question simply becomes, the only question here for Tesla shareholders is Tesla going to participate in this market running? Because so far it hasn't, right? Tesla's really been flat like the past couple of months, quite frankly. It seems like Cathie thinks that Tesla's going to participate, and that if Tesla's going to participate, that it's gonna be. Look, the past 3 months, Tesla's down 2.46%. Tesla is Tesla's down over this rally. Past month, Tesla's up 4%. In the past week, Tesla's up 4%. Year to date, Tesla's up 112%. So you could argue that in the past couple months, they aren't participating in the rally. But in general, like, Tesla just hasn't had fun while the rally's been going higher. So I think Cathie Wood thinks that Tesla's going up, and she's buying Tesla because she wants to front run it. And she's also realizing, wait a second, Tesla has Tesla has not participated at all in this rally. When the S&P starts hitting 480, 490, where's Tesla going to be? Tesla's probably going to be closer to 260, 270, not 240, not 230. It is kind of weird though that she didn't, as Mark said, she always has her stocks run after her buying. Yeah, but it's also weird that she didn't buy at 233. Because she had the money. It's not like she didn't have the money. So 233, 234, that's when I bought. I got a better price than Cathie would. So, I would tend to say I have a better understanding of Tesla. No, I'm just kidding. But like, it is weird that she didn't buy then and she's buying now. Well, she was buying Robinhood at the time, which was even more undervalued, right? So like, I guess she's come to the conclusion where it's just like, look, it's time to run and it's time to get some Tesla in order for this run. GDP numbers are out. Yes, for those that are just joining, GDP grew 4.9% in this quarter, which is really good numbers. The market was expecting 5.2. That's okay. We came in at 4.9. Some people thought we would come in at like maybe 3.3 or whatever. It's like, nope, we're at 4.9. Now, next year, I think they're expecting like 1.5% growth. I think that's going to be better than expected given the earnings potential we're seeing. But that's why we're seeing also the market run this morning because jobless claims came in lower than expected, 205,000 versus 212,000, which means we're seeing less people unemployed, which is good for the stock market, good for the consumer. And we're seeing GDP growth continue to at least sustain the levels that it's had this entire year, which is really good for stock market. Bitcoin, 43,892. Everything's green. Robinhood at 1282. We'll see how the market opens. I mean, look, maybe I'm wrong and the market turns red today. I don't think that's going to happen. I really think this is going to be a good market open. I think it's going to be a green day. If I'm wrong and we have a massive sell-off, I would be really curious about why, because none of the macro data we got this morning indicates that we should have a sell-off. So we'll see. I mean, we will see what happens, but I don't think that is going to be the case. She sold Coinbase after 300% gains to buy Tesla. Now makes sense to me. Yeah, that's another thing. She also sold a ton of Coinbase. She's made a lot of money off Coinbase. A lot of that money is now being pummeled into Tesla, which, I mean, we all know Tesla's a better investor. I mean, a better investment than Coinbase long term. But obviously, if Bitcoin keeps running, then Coinbase is going to be maybe a better investment short term than Tesla, because obviously Coinbase is correlated with Bitcoin. So in general, I mean, look, if Bitcoin hadn't run, Cathie would not have had a good end of the year. But Bitcoin runs, that allowed her to make a crap ton of money off this Coinbase stock. I mean, again, Coinbase year to date is up 400%, folks. That's a lot. That's a lot. Like at $30 in February, a lot of us left it for dead. That's my mistake as well. It's a really weird thing I didn't look at. I mean, obviously I haven't been a biggest fan of crypto, and so I wouldn't have looked at it, but we should have been looking at it. And this is what this is what the whole point of the market open is for. It's like trying to find an opportunity that we can all kind of look at, do collective due diligence. This is what we did with Robinhood. I mean, all of us kind of like came together about a month ago and we were like, is there a thesis here? And we put it together for Robinhood. So, we got to end, but we're kind of doing that with PayPal as well. Coinbase, we missed Coinbase in February. We definitely missed that one. I mean, there's people who bought in at 100 that are up on Coinbase because they just got in, right before it took off. Snapchat is at 1690, up a little bit. Pfizer's up 1.2%. Steve called me yesterday, speaking of Tesla, and he said that he's officially a shareholder. Now, it's kind of funny because he was like, I got the shares for free. I was like, how? He was like, I sold some covered calls on blah, blah, blah. I took the premium and I bought some Tesla. And like, Steve, that doesn't count. And he started laughing. I was like, Steve, you got to take your own money and put it into Elon's company. You can't take the covered call premiums you get from the market and then use that as justification for being a Tesla shareholder. You've got to, Zelle yourself or Venmo yourself $1,000 and actually put it into Tesla. And so until he actually does that, I still don't consider him a real shareholder, because that's when you really feel it. Because if he loses, some money on it, it's the market's money. It's the options premium. It wasn't really his money. So we got to get him to actually buy. Maybe we'll do a podcast and make him buy it live in front of us. That'll be fun to see happen. Okay, what do we got? We got 40 seconds until the market opens. Thank you, everybody, for being here. We got Christmas in 4 days, which is insane. End of the year in 9 days, dude, or 10 days. We're gonna literally be in 2024. It's kind of crazy. I hope everyone had a good 2023. Obviously, market's done decently well, and we got a whole new year to enter as well. So it's going to be pretty exciting going into 2024, and we'll end up seeing what happens to the market. Ladies and gentlemen, December 21st, 2023, 9:30 a.m. Once again, the stock market is open. Wake your ass up. Here we go. Let's get into it and let's discuss what's going on in the markets. Tesla opens up at 252, up 1.98%. Not bad at all. Coinbase, 166, up 2.48%. Hut 8 Mining, up 3.29%. Bitcoin, 43,000. S&P, 471, fell yesterday to 469. Markets like, nope, that's stupid. We're buying this up because we are risk on baby. Robinhood, 1280, up 1.42%. IWM Russell Index, 198, up 1.2%. ARM at $70. Instacart at 2348. Instacart even up 1.43%. S&P again, 471. Bitfarms is up 3.49%. Amazon up 0.459%. Wingstop up 1% at 255 now. Wingstop is up almost like 100% in the past month. GameStop is up 1.78%. Pfizer up 1%. Adobe up 1.66%. Adobe, again, the market is very happy they're not spending 20-something billion dollars on Figma because they didn't want them to spend that on Figma and have to do with it if they could just compete. So Adobe just having to pay $1 billion breakup fee, and the market's continuing to like them and give them momentum. Snapchat at $17.05, up 2.65% of the day. Truist up 1.31% as well, 36.26. KRE had a tough time yesterday as well when the market fell. KRE is up 1.36%. Again, the regional banks, I believe they're undervalued. When those interest rate cuts happen, their AOIC losses get off the loan portfolio. The tangible book value goes up. These things are going to run in 2024 as long as we get interest rate cuts. And it's just a question of seeing when that is going to be able to happen. Robinhood up a little bit more, 1286, up 1.88%. What else? We got MicroStrategy, 588, up 2.5%. Microsoft, 373. Meta, 356. All-time highs on, or not all-time highs, but 52-week highs on Meta. $914 billion market cap. Absolutely incredible to Zuckerberg. I mean, he's pulled it off, came from the depths of hell at $88. Now at 305. Nikola is up 2.9%. I think these are just day traders playing with it, but Nikola is up. Oh, some breaking news on Paramount. Warner Brothers Discovery is in talks to be acquiring Paramount. We talked about this a couple of weeks ago, or like a couple of episodes ago, that the consolidation of the streaming space is going to start to happen. Paramount, the company that has Paramount Plus, let me know if you own Paramount Plus at all. CBS Viacom is like the parent company that creates all the content. They own Nickelodeon. They own like a bunch of different assets. They have $15 billion in debt, and they have like $15 billion market cap, $10 billion in debt. It's like some ridiculous. They're just in a horrible situation, right? And the market's taking note of it. They almost got an acquisition offer a couple of weeks ago. That's when the stock spiked up, but now the stock's back down. It seems like WBD, this is the company that owns HBO Max, is going to consolidate with Paramount. I don't even know if the regulators will let that happen, quite frankly. Probably will let it happen way more than if Netflix wanted to buy them. Let's see if Netflix is above 500. I think they are. Let's see. Oh, 491. So they're close, but not there yet. And so that consolidation is going to be only good news for Netflix and a lot of the other streaming industries because they have less competition now to be able to deal with. Paramount Plus, in my opinion, just doesn't have good content from what I've looked at. Like really crappy content. And so that's why they're just not able to get the subscribers. But at the end of the day, that's some of the consolidation we're seeing right there. Square is at $77, up 1.31%. Duolingo, 238. Google, 140, continuing to have some more momentum as we're seeing. What else do we have? CleanSpark up 4.67%. Snowflake up 0.5%. We are seeing the Bitcoin companies continue to do well as well, and get the momentum that they need going into it right now. What else do we have? Amazon at 152. We got Wingstop 256. Costco 663. Yeah, it's a green market, folks. I mean, I can't see what's red. Paramount is red. We talked about that. I don't see too much that's red. Ethereum 2200 up 1.5%. Unity. Wow, Unity's at 40. Oh my goodness. Unity got back to $22 when they had that whole CEO that got fired or like that tried to change the plan or whatever he did. Wow, Unity's at 40. At $22 when the CEO like basically was just like the most hated man in the gaming industry, maybe that was the time to buy, quite frankly. Maybe that was like where the stock got really cheap. It's at a $15 billion market cap, kind of a mid cap, $39. Goodness, they're only $10 away from 50. 50 was their all-time high, and that was with the Apple Pro announcement. Yeah, Unity at 22 seemed like it was, just looking back on it, long term. I mean, I don't know if you found a better entry price than that over the past year. So not bad at all for Unity. Where's Path as well? This is another stock Cathie owns. Path, she's been selling it recently though. 25. I think they had pretty good earnings the past couple of quarters, and so they went from 10 in November 2022 to 26. So they have had a really good run. Elf Beauty, let's look at these guys. 148. So Elf continuing to do well. Yeah, look, we got a green market. Market's great. Oh, there we go. Robinhood. $13. This is what I'm saying. The momentum is there. Like, people want to buy the stock. People wanted to buy some more Robinhood. They wanted it. It's just the market did not let it continue to do its thing because of that sell-off, that systematic sell-off. I think Robinhood is going to break 13 and it's going to stay there. I think it will. I mean, it's going to have to fight for it, but I think there's enough buyers that are ready to buy Robinhood. There's plenty of people that want to get in on the action. The other thing about Robinhood to think about, dude, if we're actually in a risk-on environment, if it's actually going to be like really, really bullish, that trading is going to happen on Robinhood. Like, so if we think 2024 is going to be good, a lot of people are thinking, well, wait a second, if crypto is going to be good and stocks are going to be good, why would I not get some alpha from Robinhood when they're still trading relatively cheap, in my opinion, given the market cap and the cash they have on hand? AMC is up 2.76%. So for all the apes, you got a little bit of momentum there on AMC. AMC was at 393 all time after all the reverse splits. Now they're at 633. I don't know why anyone in their right mind still is investing in AMC. It's just like, I think you got to move on from this one if you're still in it, but if you're in it, I guess, maybe there's something there. SoFi, 959, up 3% of the day. SoFi making a nice little recovery. SoFi fell pretty badly yesterday after it touched $10. And it was really crushing for a lot of the bulls because that was just annoying to see them down like 7-8%. But recovering 3.2%, now $9.60 for the day. Palantir, 1770. Palantir went to 1718 yesterday, up 2.6%. So Palantir also able to maintain a little bit of momentum here as well. Chun says, can you talk about Uber? Look, Uber is in the S&P 500 now. Is it up today? Yeah, Uber's at $61. I've never liked Uber, quite frankly. The reason I never liked Uber is because I never liked the valuation. So I never got into it. I always thought 100 billion was a little bit too much. The market's pretty excited for Uber in general, and the market's excited for Uber because Uber Eats is taking off, Uber Freight is doing well, and Uber doesn't really have that much competition. If you look at Lyft, I mean, yeah, they're competition, but they're not really competition. Overseas in China, there is competition, but Uber's dominating globally. They have a lot of room to grow. They're now gap profitable, and now they have enough, momentum in terms of the market cap to sustain being in the S&P 500. So never a stock I got into, but kind of in that monopoly play in terms of its Uber and Lyft kind of sucks. Not saying you can't get better prices on Lyft sometimes, but they're just not as big as Uber. And so, yeah, Uber's there. And I wouldn't buy it right now, personally. Now it's at like not all-time highs, but close to all-time highs, and it's in the S&P 500. But if you're bullish on the company long-term and you think there's a thesis there, which I absolutely think there's a thesis there, then yeah, you got to have a 5-6 year horizon. But if you're looking for a quick trade, Uber at 61 after it's run up that high, it's a little bit harder to justify that. Let's listen to my girlfriend who was on CNBC yesterday. You guys know who I'm talking about. You guys know JP Morgan's Gabriela Santos talking about what's going to happen in the market. June says WBD is down with the Paramount possible merger. Yeah, because if WBD is shilling out, billions of dollars, the market's like, all right, well, we don't like that you're spending that much money. So usually when the company tries to acquire that company's stock goes down. All right, let's hear Gabriela Santos and see what she's going to say. She's one of the chief economic strategists at JP Morgan about what's going on going into 2024.
It's been a while since we've seen red on the screen, hasn't it?
Yes, it has.
Sit here searching for answers like, wow, you mean stocks actually go down now?
Crazy.
Yeah, so what do you think lies ahead, given how far we've come in a reasonably short period of time?
In a very quick moment of time.
Yeah.
I was reading this amazing stat that the equal weight index went from a 52-week low to a 52-week high in 33 days, the fastest since 1982. So just one of many ways to see how quickly the narrative has changed. And I think we've gotten to the other extreme, one where it's become too focused on just chasing whatever is cyclical, whatever has lagged, and that's the story. And pricing in rate cuts as soon as March. Now we're talking about 6. We've gone to the other extreme. So I think it would be perfectly natural to have certain down days, to consolidate a bit, maybe even have a bit of a pullback early next year before ultimately we move higher. We do have somewhat of a broadening of the rally, but still focus more on quality than just pure cyclicality.
Has more than the narrative changed? You say the narrative's changed. It obviously has.
Yeah.
Have the fundamentals changed along with the narrative, given this pivot that the Fed's done, some of the data around inflation and around the economy itself?
I do think that something did change last week, and it's important. And that was really the Fed's reaction function, right? For a year and a half, it was all about fighting inflation, the economy, be darned, whatever happens there. It was all about the inflation side of the mandate. And very clearly, we heard last week that that's not the case anymore. There's more comfort about the disinflation process. There's more of a balance between the two sides of the mandate. And the Fed is not willing to tolerate economic pain because they feel more comfortable we're going in the disinflationary route anyway. So they can be more proactive versus reactive. And so you took the risk off the table that real rates can continue to rise next year and that they're continuing to step on the brakes.
The risk of leaving rates too high for too long at this point.
Exactly.
Rather than suggesting, well, they might not be high enough, that's where we were not that long ago. Remember, it was like err on the side of doing too much. Don't make the same mistakes we've made 40 years ago. Let's err on that side. Now it's sort of, well, let's not do too much and wreck a good thing.
Exactly.
And one of the things Gabriella is saying here that's so important is she's saying, like, look, she and Tom Lee both agree we can see a pullback in H1 of 2024. So we can see in the first half, like, we do have a pullback. But the problem is there's not enough momentum there. That's when the Bears think they're going to win. There's not enough to keep that going towards the end of the year. So they think a lot of the gains are going to happen in the second half of the year. But that doesn't mean we can't have a little bit of a pullback as we're getting ready for those rate cuts to start.
And there's been so much debate since the meeting last week about what exactly led to the pivot. There are many explanations. We take the view that it's more actually the constructive explanation, which is just that inflation has continued to move down. We've unwound 60% of the core inflation pandemic surge at the same time that the unemployment rate has stayed below 4% for 22 months. So you can have resilient growth and continue to make progress towards the 2% inflation mandate. And for us, it took a while actually for them to acknowledge it, but better late than never. Mm-hmm. And it actually increases the odds of the cycle extending next year.
You're a believer in the broadening?
We are, but too much of a good thing.
We had too much of a good thing lately?
I think so, because if you look at the top performers since late October, it's very, very cyclical bits of the market, like regional banks, home builders, small caps. And just saying that the Fed is proactive and we're extending the cycle, it doesn't mean everything is rosy and perfect. It still means the economy slows down a bit. It still means we're late cycle. It still means real rates are very restrictive.
You still think we're late cycle? Very late cycle.
And I think that's where I'm excited for the conversation to go next year. Less hard landing, soft landing, and more, where are we in the cycle? And we do think if you look at the unemployment rate and that stat of it being below 4% for nearly 2 years, that's screaming late cycle. But late cycle can extend for years. We saw.
Now, that's really important as well. Okay, so we had the Cantor Fitzgerald guy that was not as attractive as Gabriela Santos yesterday and very unattractive because he's a bear, say, well, you can't have a bull market if you have unemployment at 4%, right? His argument is like unemployment has to be like 15%, and then you have to inject all this labor and stimulus into the economy, and that's what gets it to come down, and that's what creates the bull market. Gabriela Santos is like, okay, that's right from a pure macroeconomic perspective. But the problem is if we're late cycle, which is at the end of a bull run, that can last for years. That doesn't have to stop tomorrow. And like the problem with what he's been saying is that COVID, we had the massive unemployment rate, right? And that unemployment rate had came down after we injected all the stimulus, which allowed employment to go higher, jobs to be made, et cetera. And this is what I've been saying for the past couple of days when the market opened. COVID, we had unemployment, and unemployment came down because we injected stimulus, and so we had a bull market, right? But the problem was the stimulus we injected was not natural. We printed $7 trillion. It wasn't like anything we've ever done before. And so when you have that level of artificial stimulus injected into the economy and you have all these asset prices rising like crazy, then when you have a crash into 2022, we have a recovery period. We are still in that recovery period. We haven't even hit where we were on January 22 on the S&P. And we've been through hell to try to get there down. Right? I mean, like, well, it's 340 on the bottom. So what was it? 478 minus 340 divided by 478. So we took a drawdown of about 28% down on the S&P 500. And this year we're up like 22%, right? So, I mean, at one point you have to kind of ask yourself, like, wait a second, even if we are late cycle, this late cycle can last for a while before something like fundamentally breaks. And that could be many years until we see that happen. Or we actually do just have a soft landing. Like that is something that could also happen where inflation comes down, growth stays stable, and Jerome Powell pulls it off. I know a lot of people are saying, well, that's not likely. It's like, well, a lot of things haven't been likely over the past couple of months, but it's happened. We've been able to figure it out. We had a whole bank collapse in Silicon Valley, and we've still been able to figure, like, this has been the year of anomalies, and you got to give it to JPAL because they've been able to figure it out, because I think the COVID stimulus printing, which caused this whole ruckus, was an anomaly in and of itself. So yeah, I agree with Santos. I think she is right at the end of the day for this argument. Let's get back into some of these equities and see how they're doing right now, and then we will move forward. So how are we doing? Uber's at 61, Alpha's up, KRE 51.98, cooling down a little bit, Coinbase 166, Robinhood 12.74. Okay, so we're selling off a little bit there. SoFi 9.49. So selling off, not selling off to the point where we're red. Again, I think that's super normal. Market's taking a breather. Market's making sure that it's not, insanity in terms of how fast we're moving. But being green matters the most here versus like slipping into that red kind of level. And so, yeah, it's kind of just like a boring green day. Nothing too crazy. Nothing, again, for Robinhood, if we can even end the year at like 1250 or above, like that would be phenomenal, given that would be up like 50% in the past couple months. So like that would still be amazing. A lot of these stocks ending where they are right now towards the end of the year, which I think they can go higher, but if they just end at this level, I think the market would be really happy. And investors would be really happy going into 2024, give them some time to get to that level, and then we go forward from there. So we're having a green market for today. You guys said why isn't Liz Young your girlfriend? Dude, Liz Young is a bear. Could you imagine dating a bear all day? Like, could you imagine that? They would just be so pessimistic on everything. And so like, you'd be like, babe, this, like the market's green. And she'd be like, yeah, but like the interest rate, yield conversion. And it's just like, okay, but the market's green. It would just be like, it would suck. It would literally suck trying to date a girl that's bearish all the time. So I couldn't do that. I don't know about you guys, but I couldn't do that. That would be too much. That would be way too much. If Liz knows how to cook, maybe. Dude, it doesn't matter. You could cook. A lot of people can cook, but if you're bearish all day, that's just like, it's tough to handle. Okay, I want to bring up a couple of other things right here. Let me just close out some of these tabs and pull this up right here. One of the clips I wanted to show you guys that was about where interest rates potentially could go. For those that are just joining, some of the big news this morning was that Cathie Wood bought 111,000 shares of Tesla. That was big news. Palantir, we're having protesters outside of their London office that are protesting them getting the NHS deal. That is some of the big news we had. Macro GDP growth is at 4.9%. That's been really good. Unemployment came in lower than expected in terms of jobless claims. That's been really good. And overall, equities are continuing to be green. Kelly says you need a girl without any opinions. Low key, I mean, dude, I talked about this on Finance Junkies, but Carlos had that take the other day where he was just like, he's fighting with men all day. He just wants to come home and not have to fight with his wife, right? And I kind of was like, this makes a lot of sense, right? Like at the end of the day, if you're fighting in a competitive, cutthroat environment and you're trying to be at the most elite level that you can be as a man, when you come home, you don't want to fight with your woman, bro. Like you don't want your woman to like just drag you down and have like I don't want to be in political arguments with my wife ever. Like, why would we ever have a political argument? Why can't we just both agree like on the same politics? Like we should, if we're going to have arguments, which we will, because a couple has arguments, why would it be over something as stupid as politics? Like I would never want to have to debate Israel-Palestine with my wife. Even if we theoretically disagree, we should just like be like, okay, whatever. That's like the least important thing that we should be caring about. So I don't want to have to debate anything with my wife. I want to debate like where we're going on for fucking vacation, bro. I don't want to debate the state of the nature of like the geopolitical aspect of the world. Like that'd be so ridiculous. Okay, cool. So let me pull up this video. This is the one I wanted to show you guys in the context of some of the things that are going on with interest rates. So let's go right here. Here is kind of market potentially could be going. This is one of the macro strategists that's a little bit more bullish, and some of the arguments that he sees is happening. Adric says, are you 1997? Yes, I was born in 1997, so I'm 26 years old. Here we go.
Today's market pullback. Let's bring in Tony Dwyer, Chief Market Strategist at Canaccord Genuity. Tony, welcome. You yesterday, I believe it was.
By the way, this guy just looks like a nice guy. He just looks like a really nice guy. Like this guy just looks like he's nice.
Put out a note talking about the current extreme overbought condition in the broad equity market. it's as if the market heard you.
If only I had that kind of power, I'd be on the video in a commercial.
By the way, welcome. Good to have you with us.
It's great to be here, Tyler. You know, it's as we're talking in the green room, if I walked up to Guy and I told Guy a bald-faced lie right to him, and then the next statement I said to Guy was, "This one's right. I'm telling the truth," you would question it, right? So
he's going to make a really interesting point here about the Fed and the Fed lying.
What that you're referring to, Tyler, is we called it, now it's proving time after you've had such a big rally. In October 27th, when the market was poised for, had set the stage for a rally, what was it telling us then? Everybody was thinking it was going to go to 6% on the 10-year. The 8 of the 11 sectors were negative on the year. All the indices except for the Dow and the S&P and the NASDAQ were down on the year. What was it telling us? It was time to buy. So we're now in opposite day. And we hear that the market's telling us that because it's making new highs and it's rolling, that we're going to have a great economy and interest rates are going to continue to go down. Well, the last time it told us something, it lied. And I don't, this isn't a comment on FedEx, but it was making a 52-week high. It was going up every single day. And then they came out with weaker numbers and it's down 11%.
So the lie now is?
The lie could be that everything's great. The economy is a perfect soft landing. Powell got it exactly right. They raised rates in a historic way into a generationally levered system. We're at 18 times earnings, excluding the Mag 7. So it's hard after the rally. On October 27th, Tyler, it was identifiable. You've never been that oversold on the weekly stochastic we use. You had the bond market at 5% on the 10-year with 3 events coming up. A former Fed chair was going to tell us what they were going to issue for treasuries. You had a Fed meeting and you had a payroll report. What were the odds that Janet Yellen, a former Fed chair who's determining the maturity duration for the issuance, is going to hurt her own administration with a bad news item? So the rally was identifiable. It's gone a lot further than I or most others thought. Now it's proving time. You got to see credit improve.
So one of his core points is ultimately the rally has to prove itself, which I agree with a lot, right? Like at the end of the day, the rally needs to prove itself with earnings in order to keep this going. But the question simply becomes, how much does the market want from the rally to be able to prove itself, right? Does the rally need Palantir to show 30% year-over-year growth? I don't think so. I think the rally, Palantir ends up showing 18, 19% year-over-year growth. The market gets happy. And so as long as these numbers come in somewhat in line, which is kind of the whole point of what Tom Lee's been saying, it's like, or not Tom Lee, Dan Ives, which we'll listen to him in a second as well, which is these numbers are going to come in line and they're going to be better than what a lot of people think. And if they're going to be better than what a lot of people think, just because where AI spend is going, how the market's getting a little higher, then it's really hard for us to be super, super bearish and scared about how the market is continuing to go higher. Because if the numbers are there, the numbers are there. And that's ultimately going to be a good thing. Let's listen to Dan Ives here, and then we'll end it out and hear what he has to say as well on the market. This was yesterday.
You know the guy. He's Dan Ives, Wedbush Securities Analyst, and he joins us right here at Post 9 as ever, looking quite dapper. I don't think any of our audience will be surprised to hear that you're bullish going into 2024, and that a lot of it, what undergirds your thesis is the growth of AI. Why and what gives you the confidence that you'll be right?
I think it's really the use cases. I mean, use cases, that's the yellow brick road. You follow the use cases, that's where the growth's exploding. And I think when I look at enterprise software, when I look at some of really the transformative names, what's happened with Microsoft, what's happened in Alphabet, of course, godfather of AI, NVIDIA, and then you look at some of the pure plays, Palantir, MongoDB. I think the difference now is that it's going to spread to the rest of tech in 2024. I believe this new tech bull market has already begun.
Right. I mean, you've talked about this in the past being a moment similar to 1995, essentially the advent of the internet. When you talk about a spread, though, and you see what the benefits going to so many companies, and that will be reflected more broadly in their stock prices as well, beyond sort of some of the names we're looking at and other beneficiaries so far this year?
Yeah, I think the difference is that when I look at street numbers for 2024 across tech, specifically when I look at software, even big tech, I think potentially underestimated by 5, 7, 10%. So when you look over the next few years, even some of the bears now, they're coming out of their caves out of hibernation mode, starting to maybe reevaluate some of these names in terms of what the growth could look like. And that's why I think Magnificent Seven I believe it's up 30% over the next year. But I think in terms of overall tech, we see the year from now, I think tech's up another 25% because of this transformational AI revolution that's now here.
I'm curious, you say Apple, which
real quick. I know a lot of people say, sometimes Dan Ives says a lot of these gimmicky words and he says the same thing. And it's kind of like, it gets, he's kind of just like saying random words and putting them together. I can understand that perspective because his argument sounds the same a lot, right? And like we hear him say the same thing. The only difference is when I spoke to him on my channel, he travels millions and millions of miles every year speaking to these people. He's just good on TV. He knows how to not be overcomplicated and say random stuff, right? So he has the same talking points and he puts them together. But his big point about this being a 1995 moment, he's been in tech for 30 years. He hasn't seen a moment like this since the internet. And so that's his argument. It's like when he's traveling all across the world, talking to all these people saying that this is actually transformational. That's why he keeps saying the same thing, because a lot of people don't believe him. But his argument's like, dude, I've been in tech for a long time. Outside of AI or outside of the internet, AI has been the only thing where we've seen a real potential for just monumental growth, because other than that, you're just calling it quarter by quarter.
Also is you're positive on and believe we'll have a good year next year. You see it introducing the AI App Store. There are a number of, I think, investors who are like, where is Apple on AI? It's not a name that comes up that often. And do they have a strategy? Is it going to be effective and robust?
And I think, look, Cook plays chess, others play checkers. And I think this is another example. They've been late, but within those walls of Apple Park, I think what they're really focused on is developing a separate app store that's going to be AI apps within Apple's ecosystem. And from a monetization perspective, I think that could be an incremental $5-6 billion per year. I think that's something that gets talked about at WWDC. It's one of our predictions in 2024. And I think this is going to be another part of that re-rating. I think we sit here a year from now, the first $4 trillion company we believe will happen in 2024 being Apple, followed by Redmond and Nadella, in terms of what we see with Microsoft.
The good part for us is, Dan, that while we have to keep it short today, we get to have you back soon. And we will a year from now to see whether you were right.
No, thanks for having me. And I think, again, the new bull market's here. We think it's get out the popcorn moment for tech.
Get out the
Oh, sorry. I'm muted. Sorry. That was only like 30 seconds. That was not long. Hold on. We're going to see how long I was. When's the first time we got the mute button? 9:57. It's 9:58. That was literally a minute. That one you can't even get. Oh my gosh. Imagine I just didn't look. I just kept talking, I would have done the whole word of the day and all that stuff. That was a minute. That was all right. We can handle that. I was saying the market's still pretty green. Robinhood is down just a little bit now, selling off at 1260, down 0.12%. SoFi 1.61% higher. Enphase up 2%. S&P still at 0.67, 471. And Palantir is at 1.7%, $17.55. That's all. So not too bad. We're on your ass this morning. Oh man. You can mute the cowbell from now. You guys are hilarious. Okay. Word of the day is silence. Dude, I swear to God, dude, I think I have the funniest chat on YouTube. Like, I don't know how, because why I think I have the funniest chat on YouTube? Well, I'm the funniest person on YouTube. Okay. So, I mean, it's only natural that the chat follows my lead. So you guys are doing a good job. I'm not going to lie. I mean, you got some work to do before you get to my level of humor, but I'm just being honest. Like, I'm not even trying to be cocky here. I'm not an arrogant guy. But it's like call a spade. But yeah, that's what it is. Okay, the word of the day is transmogrify.
Transmogrify.
Okay, I got the MO wrong. Transmogrify. To change in appearance or form, especially strangely or grotesquely, transform. Okay, so it's like transform, but to do it in a really weird way. Transmogrify. Okay. The old rusty car magically transmogrified into a sleek futuristic vehicle. The Caterpillar underwent a remarkable transformation as it transmogrified into a vibrant butterfly, spreading its colorful wings for the first time. That is such a good sentence. Wow. That's a good one. I like that one. That's a cool one because it's showing the evolution of a caterpillar into a butterfly. I really like that one. Caterpillar went to a transmogrification into a vibrant butterfly. I always thought the concept of a caterpillar. Have you guys thought of that? Like when you guys first learned what a caterpillar was and how it turns into a butterfly, did you ever think like that was one of the coolest things in the world to see this like caterpillar in this cocoon turn into this butterfly? Like it's actually just that process is just so crazy. It's really interesting. All right, that's it for me. Daily Palantir episode will be out later today. Finance Junkies at 9 p.m. And yeah, I'll be back tomorrow. Market open. Tomorrow's the last day. Mom's birthday's tomorrow. I'm about to go get her a gift right now. And we'll keep it going from there. Keep doing what we got to do. Thank you, everybody, for joining. Have a good day. Hope you guys are getting ready for the holidays, getting ready to spend time with family. And if you aren't doing too much, Christmas Eve, I'll be here live for like 5 hours. So we'll be live Christmas Eve. We'll have some fun on the channel. Keep going from there. All right, that's it. Thank you, everybody. Have a great day. See you guys tomorrow. Bye-bye.